Listen, the bottom that you're seeing in gold is like a perfect Miami Beach bottom. You know, just deal with the reality. Gold will go up and will go down. The DNA of volatility you can measure over 20 trading days, 60 trading days, 12 months. It was up, David, when we talked about time for correction, the beginning of August, three standard deviations over 20 trading days. It's now down 1 standard deviation. It's had a 3 standard deviation correction on the 20-day rate of change. Over 60 days, it's now fallen below the median. So we're now in that perfect bottom time of accumulating. And math also suggests the seasonality of gold, that it rises in October. And it's Halloween time coming soon and elections. Love. Don't ever forget that word, love. That 4-letter word, just like gold, it's a very important word. It's love season. It's a seasonality of 2 wedding seasons in India. It's a season of lights, the Diwali season. We then have Christmas, and then it peaks with Chinese New Year. So this is a very auspicious time for consumption of gold, and it's most highly correlated with GDP per capita growth. And what we've seen in 30 years is China and India's GDP per capita wasn't on the table. And they were only consuming, less than 5% of the world's gold. Now they're 53%. Why is that? Because their GDP per capita, their purchasing power parity is up with the US. It's India, it's China and America. So this is an important part of love. Yeah, I think you can easily see the dollar go through that rally in November if Trump wins. No doubt, I would expect that, but I think it'll be short term because it's bigger. Like people all think it's just America right now. No, the world is fighting World War III, and it's called coronavirus 19. That's what it is, COVID-19. And the G20 countries, the finance ministers, their central bankers are all working together, and it's all currency debasement, massive money printing. You're seeing it in real estate, and you're seeing it in liquid assets like gold. Absolutely. I mean, they're talking right now, a debate. Is it going to be a 1.7 trillion or a 2.2 trillion stimulus, additional stimulus? And that goes through that 2.2. My numbers are right on that this is going to be a $7 trillion expansionary program to get the economy going in America. When we look at China, I think the total debt in China is 5 times, it's like 500% of the GDP. I mean, it's massive. Japan's the same way. So I think that people have to look at just the macro forces of what's going on and the money printing, so that the global engine, what was set in place 20 years ago of world trade, is important. Now is to keep global trade important and keep the economy going. More volatility. He's got the coronavirus, he's in the hospital, he's out, now he's got this and that. It's October. It's a funky month of the year. Expect volatility, trade the volatility, buy on the dips, and sell into the rallies. Look, there's some betting on blue, some betting on red, and I'm betting on gold. I'm betting on gold. John Williams, who has Shadow Stats. It's a great website, Shadow Stats. And he publishes how the CPI algorithm, the model that the index is created on. And if you go back to 1980, when inflation was out of control and Volcker came in and basically had to raise interest rates 600 basis points over the CPI number to get control, if you use that number, inflation's at 9% right now. I'm much more a believer that inflation is much higher. Housing in San Antonio, lumber prices are up 40% in the past 5 months, 40%. There's no inflation, it's 1.3, that's BS. But if even at 1.3, the 10-year government bond is negative, the 5-year government bond is negative, the 2-year is very negative yields, it's just good to go and buy dividend-paying stocks with capacity to raise their dividends. You buy gold, and if you're going to buy numismatics, I was learning that you want to buy the panda bear, because America produces substantially more gold coins, and there's no big premium on them at this stage. But as the cycle evolves, you're going to see these things change. Gold's been around for 5,000 years. 5,000 years. And it will always maintain its value. Guys can try to play games with it, try to suppress it. It could be political people, it doesn't matter. Gold always rises, and it creates a perfect supply and demand balance. So I think if that's what they think, then they shouldn't be buying gold, and they should go and look to buy something else. Prudent investors like Ray Dalio, the largest hedge fund in the world, he has a 10% weighting in gold and recalibrates it on a monthly basis. When I first got into business, David, it used to be the London bullion pricing was twice a day, and the New York Stock Exchange or the New York commodities shut down like 1:30, 2:30 time range, depending between Chicago. All of a sudden you would see volatility between those prices, and you could recognize there was really distinct patterns when the UK was on a holiday. So what's happened is that now China has come from Shanghai from being a price taker in gold, they're now the price maker. So therefore, if you want to spook the markets, it's when the Chinese are not there, when they have a holiday. And all of a sudden you see the greater volatility escalates as a higher probability anytime there's a Chinese banking holiday or Chinese New Year. This first week in October is celebrating Mao and communism in China, so they shut down. Well, it's so interesting because it comes with China and their Kinky Gold company, or Kink Gold. I think that the reality is there's always going to be people trying to play games to borrow money. It's never going to stop. It's, do you have good detection processes to deal with that? And I think it's a wake-up call for China because of the sheer magnitude of what 80 some odd tons of gold, approximately 20% of their annual gold production, 5% of their reserves. These are big numbers of cold plating copper and tungsten. But I think that's you don't want to get caught up with that narrative. It's just part of it'll get exposed. There'll be big penalties over there, but real gold will maintain its value. It's not a straight line up. Well, it's fall season, and what will the numbers be coming and going to the last quarter? So historically, you get this sell-off in October and a huge run in November, December, and you just have to recognize how foreign currencies are moving. Money's being repatriated back by corporations after October. I know for mutual funds, for tax loss selling, we have to do it in October earlier. So there's interesting dynamics that take place in them. It's not one factor. It's many that sort of come at this time. But usually, you know what, David? Sell-offs are good buying opportunities for the trade. Well, he started his debate. He said, "Look what I've done to your 401ks." Something of that commentary. He follows the stock market. He's a Wharton grad. He recognizes the stock market is a forward-looking tool, just like PMI. By the way, we forgot to talk about PMI, David. The numbers are fabulous. They're so good for commodities and gold and copper and silver. And the other thing was, I forgot to share with you, there's lots of physical silver movement leaving the U.S. going to Europe and Asia right now. That's something else that I was able to glean from interviews I was doing on This Week in Research. So I think that the silver, the gold market, they're just poised. You buy on the dips, and the upside is so fast. just shipments. They're getting orders. People are moving tons of silver, which I thought was most fascinating to hear. People that are involved as brokers in moving silver bars. So I think all these things lend themselves that with paper money, and it's so cheap that all of a sudden people are trying to scramble to get real assets on their balance sheets. Now, the other thing I want to share with you is really important to all your listeners. This September and will most likely be the highest free cash flow the gold industry has ever generated. If even with the sell-off in gold up to over just slightly under 2,000, this quarter will be phenomenal. Better discipline by management. Even with COVID, there's better discipline with management. The price of gold rallies. The price of oil doesn't do anything to affect costs. We're going to have record free cash flow, and that's why Warren Buffett bought Barrick. And so you're going to see a change taking in psychology with pension funds and institutions going to this last quarter as the numbers populate. The S&P doesn't have the free cash flow it had a year ago at the end of September, like gold stocks have. So I remain extremely bullish. Next time gold surges through 2,100, the gold stocks will go 3 to 1.